Hey guys, what is up and welcome to a new Tesla and just really market update in general. We'll go over the market today. We'll go over what happened in the markets today. A very wild day, every day has been pretty wild, but today arguably has been extra wild. So we'll go over what the hell happened in the market today, what we can expect moving into the rest of the week. Fresh month to start the week off, sort of, I guess. Starting tomorrow, we have April 2nd. It's a big day. We have, obviously Tesla's delivery numbers coming out. Who knows how that's going to be? I'm slightly optimistic because they sold a shit ton of Model Ys towards the end of the quarter here on that discount. So, fingers crossed on that. We have Trump, of course, Mr. Simpson man himself on Tuesday or Wednesday with his tariff day. We'll see how that goes. And let's just go over the market. If you enjoy, don't forget to hit that like button. It's not financial advice. I am not a financial advisor. But if you enjoy my technical analysis, my thoughts on the charts, and you want to hear my thoughts throughout the day as the market is trading, on Tesla, sometimes other stocks, NVDA, I do have a membership section in YouTube. That link is down below. Just $3 a month. You get access to my posts, updates, etc. throughout the day as the market is trading, constantly updating technical analysis, thoughts, options flow as well. So, when it's something worth updating, of course. So the link is below for $3 a month. Tesla plus other stocks sometimes as well, or $5 a month gives you access to the second tier, which includes NVIDIA if you're interested, plus of course the first tier as well. But jumping into a Tesla closing down, and I'm going to use the word only, 1.6% closing at pretty much, we'll just say $260 per share, pretty darn close to it, which compared to the market is going to be a slight underperformance, obviously. But I use the word only here because at the lowest point of the day, Tesla was at 244, we'll say. That was down close to about 7%, if I'm not mistaken. Let's take a quick little zoom in over here. We'll go from up here all the way down to the bottom. Almost even 8%, actually, the very lowest point of the day, about 7.5%, closer to 8% on the day. So recovering the vast majority, that alongside the market, of course, is not a bad sign. So what does this mean moving forward for Tesla? So I want to quickly pause here though, and I want to just kind of very quickly go over the broader market, right? Again, we just had quarter finish, we had the month finish. We had the JPM collar finish. There was a lot of things that just finished. But something I want to pay your mind to, and this is what I was talking to my members about over the weekend that is very interesting, is this. So obviously right now the market's falling aggressively, right? A lot of people are attributing it to Trump, his tariff, the tariff noise, uncertainty, and that's probably a good portion of it, right? Plus I'm sure of many other factors, but that's probably the easiest one to point your fingers to. I want to point your attention to something very interesting. All the way back here, right? 2018. So it's gonna be pretty far back actually. 2018 will be all the way back here. And I think it was here, this one here. So this right here, this situation right here back in 2018 was roughly around the same time that Trump, of course, was in office for his first term. And also there was a lot of, tariff noise, etc. And look what happened. The market also dropped very aggressively. I saw statistics somewhere that Trump, I think, holds top 6 of the fastest drops in SPY ever, or relative to any president in their opening year or something like that. I don't know. In other words, Trump's first year tends to be very volatile, usually to the downside. And obviously this is no exception. But one thing I want to point your mind to is this similar situation here, right? We're also, a lot of tariff noise, etc. A lot of people are talking about Trump tariff 2.0, 1.0, comparing them, etc. So this is roughly where that situation was. And it topped, also topped, all the way over here. But the interesting to note is, so we had this drop, and then we had a recovery, and then we had this drop. Pretty much exactly what we're in right now. We're pretty much right around here, right? Pretty much making roughly equal lows. But guess where we bottomed out? The lowest candle right here was the candle that we bottomed out, this red one right here. And then we pretty much never made a lower low before that. And we started essentially making our way back up into about September, November, where we did experience a decent fall. But nonetheless, the market did recover into about September. So let's see if history rhymes. And guess what's even more interesting than that? Guess the exact date the market bottomed and didn't actually go lower, right? That day was right here, April 2nd. That was the day that the market bottomed on this candle right here and never went lower for the next several months. Now, again, we have April 2nd coming up in just a couple of days here. Coincidence? I don't know. Let's see. Just thought it was an interesting point to mention out. Maybe it means nothing at all. Maybe it's exactly how the algorithms are playing it. Who the hell knows? But I thought it was just something interesting worth sharing. Jumping over to Tesla though. So what does Tesla want to do here? Well, Tesla, in my opinion, is sitting in a very interesting spot. It is roughly sitting in, it's kind of still in this sort of rising channel in the 1 hour. I'm not sure how much I like this rising channel anymore, mainly because this recent price action on the last, 3 hours over here is kind of wishy-washy. It's kind of, rejected, then it went back into it, then it kind of went below it. Now it's kind of back into it. So I'm not exactly sure how much I'm liking this 1 hour rising channel that we are in. So we'll keep it for now, but that's one thing to talk about. But another thing to look at is going to be I don't like looking at 5-minute charts usually, but it is showing a bit of a rising wedge here as it's getting tighter and tighter and tighter, very close to falling out, but it didn't. So essentially what the bulls want to do is they want ideally to hold pretty much right around this kind of 257-ish range, and to ultimately, the best case scenario is to break out and then make our way higher. But the reason I'm bringing this up is because there is a risk that if we do kind of tread a little bit higher and get closer to about this gap fill at around 263 and change, there is a chance that it gets up there and then gets a rejection back down to about the mid to low 250s, and then we finally make our way up, right? That, keep in mind, that is a possibility that shouldn't be fully ignored, right? We're not fully out of the woods just yet, especially with the delivery numbers on Tesla coming out on Wednesday. I mean, that's anyone's guess at this point. So that's something else to watch out for. That's, again, on a much smaller time frame. Going over to the daily chart, right? So we opened up well below the 8 exponential moving average, as most of the market did, and recovered pretty much right back up to that 8 exponential moving average. The good news is the fact that there's a few other good news, like for instance, SPY, even though it technically made a lower low today, and I know the RSI is based on candle closure, but even when it was at the low of the day, a very obvious bullish divergence was formed and is formed on SPY and on QQQ, which is a good sign. So some nice bullish divergences are being formed over there. Tesla is getting this, obviously massive sell-off on the daily. Let's take a quick look. Unfortunately, we couldn't close green on Tesla. That would have been even better, but we didn't. That's fine. But Tesla did drop right to the 618 Fibonacci level, whether you measure from here or whether we want to measure from here. Ultimately gives you the same kind of result. The point is that it dropped to that 618 Fibonacci level, which is a beautiful, like pretty much almost perfection of a retest down to these levels to kind of correct this very aggressive move. Because again, when you move up this aggressively, that's usually not, it usually is not sustainable, right? Very aggressive moves are usually not sustainable. So we're getting that much needed correction. It's a little bit steeper than I initially anticipated because we could have just easily stopped up here, but sometimes it is what it is. But we came down to the most common retracement. I think worst case scenario is somehow if it gets really bad or deliveries ends up being bad or whatever, we can come down to about the 230s over here, which would be that deeper retracement, still maintaining that bullish thesis while that holds, assuming we get to 230. But anything below that, we expect a double bottom potential situation here. Worst case, obviously, we make a lower low. But the point I'm trying to make is the fact that we are at this Fibonacci retracement at the 618, which is good. That is a good level to retrace to. That is a good level to hold that we have held so far today. And as if that wasn't enough, there's a bit more confluence in this area because this is also the level that we retested. If we go to the 1 hour chart, honestly, I might just say screw this channel. One thing that's also really interesting to note is the fact that we did come down to this level right here and we did retest this range, right? Maybe it looks a little bit cleaner on the 4 hour chart, right? For instance, you can see here. Let me quickly make this only visible on the 5 minute because right now it's going to bleed into the other time frames and it's just going to make it look very messy. Back to the 4 hour chart, it just looks a little cleaner. You can see, right? Remember this level here that rejected us several times. We had the pivot point here. We got rejected here, got rejected here, got rejected here, and potentially could have got rejected here. We kind of stopped right at it. Well, we came down into it at 618 Fibonacci level, a little bit lower, held it very nicely, bounced up very aggressively, held this 250s as well. So, there's a lot of good signs here that the bulls are giving, they're being handed a very nice opportunity here. I mean, obviously things can fall apart again with Trump on the second, delivery numbers on the second. It is still a big question mark, but the bulls do have a pretty good, in my opinion, at least a chance, opportunity here to really turn this around. And I know there's a lot of people that I follow for Elliott Wave, and they're suggesting that this next move up higher, should be ready to go pretty damn soon. So let's see how this goes as well. But this is so far, again, you have to remember this whole move down. If we go to the 1 hour chart right here, right, this whole move down, we've been making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, and then higher low, higher high, potentially a higher low here. And then, again, as long as this pattern continues, technically speaking, as long as we essentially don't break this low, you can make an assumption the fact that the next move to the upside is going to be for, well, another higher high, right? Same way that we were making lower lows, lower highs until broken otherwise, like here, for instance, right? Same idea. And now you would assume that the next move is a higher high. So let's see how this plays out, right? If this actually plays out, if this truly goes through the way, it should, in theory, assuming the delivery numbers, it doesn't, destroy the stock. Obviously, the MACD's flip bullish. RSI still looking pretty solid above the RSI moving average, right? The issue is the daily is still overall in a downtrend, obviously with the EMAs over here and the downtrend here, but it doesn't mean that we can't still make our way back up at least closer to the 50 EMA here, sitting at about $300 per share, or even better yet, a retest of this overall trend line, which if that were to happen, honestly, even early this month, that can easily take Tesla to about $310 per share, which, at that point would be very interesting because then we either get a severe rejection from here, which will look something like this, and then potentially make our way, lower. That is a possibility. Or the bullish scenario is we get a small rejection like this and then make our way out, break out, retest, head higher. So that's going to be still obviously a lot of question marks to see how that, actually plays out. But assuming, roughly this low over here holds, and especially as long as we don't, essentially, in my opinion, break below 230 is the ideal scenario to hold those Fibonacci's as well on this higher low retracement. The next move up, in my opinion, as long as those levels hold, should be back up to about, we'll say the low 300s, somewhere in the low 300s, whether it's 300 itself to about closer to 310, give or take, right? Something like that. Essentially, this red trend line will be my main target. So that's something else to watch. The weekly is still looking okay, I guess. Still making higher lows on the MACD, which is good, right? And then the monthly, which officially just closed, is also pretty interesting because in the monthly, as I zoom in over here, why is it not moving? Here we go. As I go into the monthly over here, you can see Tesla is holding this trend line that has essentially held us many, many times, where we started it back here, held it many times over here, came pretty much right back into it right here. And we're pretty much holding all these pretty crucial levels. The one concern you can say here is the fact that the MACD is obviously, softening up, I guess you can say, slowly weakening up. But, if you compare it to something back here, for instance, on the monthly chart, you can see it was also softening up over here into one more push up higher. And then, of course, once it fully crossed bearish, that's when the real concerns started. So we're not there just yet. There's still, we're still in good shape for now, right? There's still potential here. We're not out of, it's not truly bearish just yet, but losing this trend line, having the MACD and the monthly flip bearish, those would be signs of concern. For instance, as an example, let's take a look at the monthly when it turned bullish, right? Which was on this monthly candle right here. It officially turned bullish. It was very close on the monthly candle before that, but this is the one it fully turned bullish. And then after one small mini drawdown that essentially created an inside month almost, it exploded up, right? And that's kind of the power of that monthly MACD there, right? So again, if the monthly MACD crosses bearish, yeah, that's a concern. But we're not there yet, still bullish, and there's still potential signs of another move higher. So let's see how that ultimately plays out as well. But in terms of options flow, nice amount of call flow came in towards the end of the day, all expiring this week. And one thing that I also like to see was this, when Tesla was at 258, a 1 million call flow came in for 260 strike, which is technically out of the money, but not by law, but technically still out of the money because it was at 258. 1 million call expiring this week. Someone's either bullish into a run up into deliveries, or they're bullish on the actual delivery number prints. Let's see. I mean, again, the delivery numbers is a big question mark. I think everyone and their mother is expecting a large miss, and I think everyone is also expecting the stock to tank post delivery numbers. That's kind of the base expectation that I'm reading from a lot of people across the board. What if they don't miss? What if the numbers go pretty well? What if they actually potentially even beat street expectations because of all the Ys that they sold towards the end of the day, or at the end of the quarter on that discount, the used ones, right? Which I believe count, if I'm not mistaken. I'm sorry, they're not used. I think they're the ones that were just in the lots. I don't think, were they used? I don't remember if they were used. I'm not sure if that counts. But I know that towards the end of the quarter, they sold a shit ton of Model Ys with that discount to make room for the new Model Y. So maybe someone can clarify me on that. But nonetheless, yeah, that's kind of what I got for you. SPY market overall looking pretty interesting as well. SPY with a pretty nice close. I would argue SPY actually looks pretty good. QQQ looks okay. SPY looks not bad with the close today, I'll be honest. So yeah, I don't know. Let's see. We're in for a wild week regardless. Wednesday is going to be a pretty big day. So let's see how that all goes. But yeah, thank you so much for watching, and I'll see you tomorrow. Peace.